Mastering trading setups in the share market, technical analysis for beginners, proven strategies to master U.S. stock trading. Author, Ryan Bolt. Voice, by Daniel Ray. Forward, your journey to mastering trading setups. Hey traders, welcome to Mastering Trading Setups in the Share Market. If you're picking up this book, you're probably hungry to crack the code of the stock market, turn chaos into opportunity, and trade with confidence. I get it. I was there too. Back in 2017, I was a rookie trader, chasing hot stocks like Tesla and Apple without a plan, hoping for a big win. I'd see a chart spike and jump in, only to watch my account shrink when the market turned. Sound familiar? The turning point came when I realized trading isn't about luck. It's about a disciplined process rooted in setups, risk management, and psychology. This book is my journey, packed with lessons from real U.S. stock trades, designed to help you trade smarter, not harder. This book is your roadmap to mastering setups in U.S. markets, like catching a Tesla rally or an Apple reversal, with tools you can verify on TradingView. We'll cover everything from spotting trends, Chapter 2, and momentum, Chapter 3, to reading volume, Chapter 4, candlestick patterns, Chapter 5, multi-time frame analysis, Chapter 6, risk management, Chapter 7, psychology, Chapter 8, advanced combinations, Chapter 9, and building a complete system, Chapter 10. Each chapter uses real data, prices, volumes, indicators, so you can see exactly how trades like a 2021 Tesla pullback or a 2023 NVIDIA breakout worked. I'll share my wins, like a 7% gain on Microsoft, and my flops, like a costly Apple misstep, to keep it real. In-depth explanation. Why focus on setups? Because they're repeatable patterns rooted in market psychology, how traders' fear and greed move prices. A hammer at support or a breakout with volume isn't random. It's human behavior in action. Psychology is the backbone. Fear made me sell winners early. Greed made me chase losers. That's why Chapter 8 dives into managing emotions, and every chapter ties back to staying disciplined. Studies show 90% of traders lose due to emotional decisions, but a systematic approach, Chapter 10, can put you in the winning 10%. This book is for anyone, newbies learning the ropes or pros refining their edge. You'll need a TradingView account to follow along, a notebook for journaling. Trust me, it's a game changer, and a willingness to practice. My goal? To give you a framework that's clear, actionable, and built on real U.S. market data, so you can trade with a cool head and grow your account. A request from me. If this book helps you see the market differently or nail a trade, I'd love to hear about it. Please share your thoughts by leaving a review on Amazon.com. Your feedback helps other traders find this book and lets me know what worked for you. Whether it's a quick star rating or a detailed review, every bit counts. The link to reach to the review page of this book is in description. Let's build a community of disciplined traders together. Get ready to dive in, practice the setups, and master your mind. The market's waiting. Let's make it work for you. Disclaimer: trading involves risk. Past performance isn't indicative of future results. Always research and consult a professional.
Introduction. Welcome to Mastering Trading Setups in the Share Market. Whether you're just starting out or you've been trading for a while, this book is designed to help you trade with confidence, clarity, and a cool head. Trading in the U.S. share market can feel like navigating a stormy sea. Exciting, but sometimes overwhelming. The secret to staying afloat? Trading setups. These are like your navigational charts, predefined, rule-based conditions that tell you when to enter or exit a trade. By sticking to setups, you can take the guesswork out of trading and make decisions with discipline, not emotion. In this book, we'll explore the best trading setups, tried and tested strategies grounded in technical analysis, logic, and real-world application in U.S. markets.
Confident. Our mission is to teach you how to spot opportunities in stocks like Apple, Tesla, or NVIDIA, follow clear rules, and manage risks without letting fear or greed take over. These setups will give you a framework to succeed in the NYSE or NASDAQ. Let's start by understanding what trading setups are, why they matter, and how to use them with a calm, focused mindset. Along the way, we'll walk through a simple example with Apple to get you excited about what's ahead. What is a trading setup? A trading setup is a specific combination of market conditions that signal a potential trade. Think of it as a recipe. Just like you need the right ingredients and steps to bake a cake, a trading setup gives you the ingredients, price patterns, indicators, volume, and steps, entry, exit, risk management, for a trade. Setups are built on technical analysis and market psychology, and in this book, we'll focus on technical setups because they're clear, repeatable, and perfect for keeping your emotions in check. For example, a setup might say, buy a U.S. stock like Apple when its price breaks above a resistance level with high volume. That's a rule. If the conditions aren't met, you don't trade. Simple, right? By following these rules, you avoid chasing hunches or panicking during market swings. Setups help you trade like a pro, methodical, patient, and focused. Why trading setups matter? The U.S. share market is a wild place. Prices jump up and down, news creates chaos, and emotions can cloud your judgment. Without a plan, it's easy to buy high in a frenzy or sell low in a panic. Trading setups are your anchor. Here's why they're so powerful. They reduce emotion. Setups give you objective rules. If the chart doesn't match your setup, you walk away. No second guessing. They improve consistency. By using the same criteria repeatedly, you can track what works and refine your strategy. They boost confidence. Knowing you're following a tested system lets you trade with a cool mind, even when the market gets crazy. They manage risk. Every good setup includes a plan for cutting losses and locking in profits. In short, setups turn trading into a disciplined process, not a gamble. And the best part? They work for U.S. stocks like Apple, Tesla, or Microsoft, giving you a reliable edge in markets like the NASDAQ. The logic behind trading setups. Why do setups work? It comes down to patterns and probabilities. Markets aren't random. They're driven by human behavior, supply and demand, and institutional money flows. Technical setups capture these patterns, like how prices tend to bounce off support levels or how momentum builds during breakouts. By studying historical data, charts, we can identify conditions that have a higher chance of leading to profitable trades. Think of it like weather forecasting. Meteorologists use patterns, like cloud formations or pressure systems, to predict rain. Traders use setups, like candlestick patterns or moving averages, to predict price moves. It's not foolproof. Nothing in trading is, but setups tilt the odds in your favor, and when you combine them with risk management, Chapter 7, you're set for long-term success. A simple trading setup in action, moving average crossover. Let's dive into a real-world example to show you how a trading setup works. We'll use a moving average crossover, one of the simplest and most popular setups applied to Apple, AAPL, a major U.S. stock. Don't worry if you're new to this. We'll break it down step by step, and you'll see how easy it is to follow the rules with a calm mind. The setup, 50-200-day moving average crossover. What it is, a moving average MA smooths out price data to show the trend. When a shorter MA, like the 50-day, crosses above a longer MA, like the 200-day, it's a bullish signal, buy. When it crosses below, it's bearish, sell. Why it works. The crossover signals a shift in momentum. When the 50-day MA crosses above the 200-day MA, it suggests buyers are taking control, pushing the price higher. Market example, let's use Apple, AAPL, on the NASDAQ during 2020. Step-by-step rules. 1. Chart setup. Pull up a daily chart of AAPL on TradingView, free and user-friendly. 2. Indicators. Add the 50-day simple moving average, SMA, and 200-day SMA. The 50-day tracks short-term trends. The 200-day tracks long-term trends. 3. Entry rule. Buy when the 50-day SMA crosses above the 200-day SMA, a golden cross. 4. Confirmation. Check for rising volume to confirm the move, more buyers, and stronger signal. 5. Stop loss. Place a stop loss below the recent swing low, e.g., 5% below entry, to limit losses. 6. Take profit. Aim for a 2.1 reward-to-risk ratio, e.g., if you risk 5%, target 10% profit. 7. Exit rule. Sell if the price hits your take profit or stop loss, or if the 50-day SMA crosses below the 200-day SMA, a death cross. Real-world example, Apple in 2020. Imagine you're trading AAPL in mid-2020. Here's how the setup plays out based on TradingView data. March 2020. AAPL crashes to 56.09, adjusted March 23rd, close 56.09 during the COVID market panic, but starts recovering. June 2020. On June 8th, the 50-day SMA crosses above the 200-day SMA at $82. Volume spikes to 164 million shares, 1.4x 20-day average, 117 million, confirming buyer interest. Entry. You buy at $80. Your stop loss is at $77.90, 5% below, risking $4.10 per share. Target. You aim for 90-20, 10% above entry for a 2.1 reward-to-risk ratio. Outcome. By August 2020, AAPL surges to 125.86, adjusted AUG 31, close 129.04 as tech stocks rally. You exit at $90.20 for a 10% profit or hold longer if your rules allow. Staying cool. Here's the magic of this setup. You didn't need to predict the market or stress about news. You followed the rules, waited for the crossover, checked volume, set your stop loss, and stuck to the plan. Even if the trade had failed, say AAPL dropped to your stop loss, you'd lose only 5%, keeping your account safe. That's trading with a cool mind, rooted in psychology. Chapter 8. What you'll learn in this book. This book is your guide to mastering setups like the moving average crossover and many more. Each chapter builds on the last, giving you tools to trade U.S. stocks confidently. Here's a sneak peek. Technical analysis. Basics. Learn to read charts, spot trends, and use indicators like a pro. Chapter 2. Trend-based setups. Catch big moves by riding market trends. Chapter 2. Momentum setups. Use indicators like RSI and MACD to time entries and exits. Chapter 3. Volume and volatility. Find explosive breakouts with tools like Bollinger Bands. Chapter 4. Candlestick patterns. Decode price action with hammers, doji, and engulfing patterns. Chapter 5. Multi-time frame strategies. Combine daily and hourly charts for precision. Chapter 6. Risk management. Protect your capital with stop losses and position sizing. Chapter 7. Psychology. Stay disciplined and avoid emotional traps. Chapter 8. Advanced setups. Combine signals for high-probability trades. Chapter 9. Complete system. Build a repeatable trading system. Chapter 10. Case studies. Analyze real U.S. stock trades like Tesla and NVIDIA to see setups in action. Each chapter includes practical examples like our Apple setup, logical explanations, why the setup works, and tips to stay calm under pressure. We'll focus on U.S. stocks like Apple, Tesla, and Microsoft, so you can apply these ideas in markets like the NYSE or NASDAQ. A word of caution. A word of, trading is exciting, but it's not a get-rich-quick scheme. All trading involves risk, and even the best setups can fail. This book isn't financial advice. It's a guide to help you develop skills and make informed decisions. Always trade with money you can afford to lose and consider consulting a financial advisor. Backtest every setup, we'll show you how, and practice in a demo account before going live. How to use this book. To get the most out of this book. Read actively. Grab a notebook or use TradingView to follow along with U.S. stock examples. Practice. Test setups on historical data. TradingView has free historical charts. Stay patient. Master one setup at a time before moving to the next. Keep a cool mind. Follow the rules, not your emotions. If a setup doesn't trigger, wait for the next one. By the end, you'll have a toolbox of setups to trade any market condition, bullish, bearish, or sideways. You'll know how to spot opportunities, manage risks, and stay calm no matter what the market throws at you. Let's get started. Ready to dive in? In Chapter 1, we'll lay the foundation with technical analysis basics, candlesticks, trends, and support resistance. You'll learn how to read charts like a pro and set the stage for every setup in the book. For now, remember, trading setups are your roadmap to success in the U.S. market. Follow the rules, stay disciplined, and let's build your trading skills together. Disclaimer: trading involves significant risk of loss. Past performance is not indicative of future results. Always conduct your own research and consult a professional before trading.
Chapter 1. Foundations of Technical Analysis. Hey there! Welcome to the first big step in our journey to mastering trading setups in the share market. When I started trading, staring at stock charts felt like trying to read a foreign language. Those wild lines, candles, and squiggles, pure chaos. But once I got the hang of technical analysis, those charts started telling a story, where buyers and sellers are duking it out, where prices might go next, and where my trading setups could shine. In this chapter, we're laying the groundwork: candlesticks, trends, support, resistance, and volume. Think of me as your trading buddy who's been through the ups and downs, sharing lessons, some learned the hard way, to help you trade U.S. stocks like Apple or Tesla with a clear, cool head. Why technical analysis matters. Let's kick things off with why technical analysis is the backbone of our trading setups. Trading is all about making smart decisions based on price movements. Sure, fundamentals like a company's earnings or news matter, but prices capture everything the market's thinking: hype, fear, you name it. Technical analysis is how we decode those price moves. It's like being a detective, using past and present price action to spot patterns that give you an edge. I learned this lesson back in 2018 when I got swept up in a biotech stock's hype. I won't name it, but it was a roller coaster. I bought on a friend's tip, ignoring the chart. Bad move. The chart was screaming overbought with a bearish reversal pattern. I lost 15% in a week. That's when it hit me. Charts don't lie, but my gut sure did. Technical analysis gives you rules to follow so you're not swayed by emotions or hot tips. It's the foundation for every setup in this book, and by the end of this chapter, you'll be reading charts like a seasoned trader. Candlesticks, the building blocks of price action.
Let's start with candlesticks, the heart of any chart. When I first saw a candlestick chart, I thought it looked like some abstract art. But these little bars tell you exactly what's going on in the market. Each candlestick represents a time period, like one day on a daily chart, and shows 4 prices: the open, close, high, and low. Here's the breakdown. Body. The thick part shows the range between the open and close prices. If the close is higher than the open, it's a green, bullish candle. If lower, it's red, bearish. Wicks, shadows. The thin lines above and below the body show the high and low prices for that period. Example, picture a daily candle on Microsoft MSFT. If it opens at $300, closes at $310, hits a high of $312, and a low of $295, you'd see a green body from $300 to $310, with a wick up to $312 and down to $295. Candlesticks reveal the battle between buyers and sellers. A long green candle, buyers dominated, pushing the price up. A tiny candle with long wicks, indecision. Nobody's in charge. Over the years, I've learned to spot candles that signal big moves. A doji candle, where open and close are almost the same, often means the market's pausing before a reversal or breakout. We'll dive into candlestick patterns in Chapter 5, but for now, know that they're your first step to building a setup. Practical tip: reading candles. Fire up a free charting platform like TradingView and pull up a U.S. stock like Apple, AAPL. Switch to a daily candlestick chart and scroll through a month of data. Notice how green candles pile up during uptrends and red ones during downtrends. Try spotting a doji. It's often near a turning point. When I started, this hands-on practice helped me get comfy with charts, and it'll do the same for you. Trends, the market's direction. If candlesticks are the words, trends are the sentences. A trend is the overall direction of a stock's price, up, down, or sideways. Spotting trends is key because most setups work best when you trade with the trend, not against it. I learned this the hard way in 2019 trying to short Tesla, TSLA, during its insane rally. The chart was shouting uptrend, but I thought I could outsmart the market. Spoiler, I got burned. Here's how to spot trends. Uptrend, higher highs and higher lows. Each peak and dip is higher than the last, like a staircase going up. Downtrend, lower highs and lower lows. The price keeps hitting new bottoms. Sideways, range-bound. The price bounces between two levels, like a ball in a pinball machine. To make it easier, I use moving averages, MAs. A simple moving average, SMA, is just the average price over a set period, like 50 days. Plot a 50-day SMA and a 200-day SMA on a chart. Price above both MAs with the 50-day above the 200-day, uptrend. Price below both with the 50-day below the 200-day, downtrend. Price crisscrossing the MAs, probably sideways. Real-world example, Amazon in 2020. Let's look at Amazon AMZN during the 2020 COVID rally. In March, AMZN tanked to $1,600 during the market crash. By April, it was making higher highs and lows, and the 50-day SMA crossed above the 200-day SMA. Textbook uptrend. If you'd bought during that crossover, like we covered in the introduction, you'd have ridden AMZN to $3,000 by September. The trend gave you the confidence to stay in, as long as you stuck to your setup rules. Logical reasoning. Trends work because markets have momentum, like a freight train. Once buyers or sellers take control, they keep pushing until something big, like earnings misses or Fed announcements, stops them. Trading with the trend is like riding a wave. It's easier and safer than fighting it.
Support and resistance, the market's battlegrounds. Now let's talk about support and resistance, the levels where prices tend to pause, reverse, or break through. These are my favorite concepts because they're so logical. Support is like a floor, a price where buyers step in to stop a drop. Resistance is a ceiling, a level where sellers push back to halt a rally. Here's how I find them. Support. Look for a price where the stock bounces multiple times. For example, if Apple, WAP, keeps finding buyers at $130, that's support. Resistance. Look for a price where the stock gets rejected repeatedly. If WAPL stalls at $150 over and over, that's resistance. Role reversal. Once a resistance breaks, say WAPL surges past $150, it often becomes support. The market's psychology flips, sellers give up, and buyers defend the new level. My first big win. I'll never forget my first big trade using support.
In 2017, I was watching Microsoft, MSFT. The stock kept bouncing off $80 like it was glued there. I set a buy order just above $80 with a stop loss at $77.50, about 3% below. The chart showed strong volume at that level, confirming buyers were stepping in. Sure enough, MSFT bounced to $90 in a few weeks. I locked in a 12% gain by following a simple rule: buy at support, sell at resistance. That trade showed me how powerful clear levels can be when you stick to the plan. Logical reasoning. Support and resistance work because of human psychology. At support, buyers see a bargain and jump in. At resistance, sellers think it's overpriced and sell off. These levels also attract big players like hedge funds, whose large orders reinforce the barriers. By trading at these levels, you're aligning with the market's natural flow. Volume, the fuel behind the move. Volume is the number of shares traded in a period, and it's like the fuel for price moves. Low volume means the market's quiet. High volume means it's buzzing. I always check volume to confirm my setups. A breakout above resistance on low volume? Likely a trap. A bounce off support with a volume spike? That's the good stuff. Quick rules. Rising volume. Confirms a strong move, up or down. Falling volume. Suggests the move is fizzling out. Volume spikes. Often signal turning points like breakouts or reversals. Practical example, a simple setup with Amazon. Let's tie candlesticks, trends, support, resistance, and volume into a setup using Amazon, AMZN, in 2020. Here's how I'd trade it, based on a chart I studied back then. 1. Chart setup, daily candlestick chart of AMZN on TradingView. 2. Trend. In June 2020, AMZN is in an uptrend, price above 50-day and 200-day SMAs. 3. Support charge resistance. The stock pulls back to a support level at $20,500 where it bounced twice before. 4. Candlestick. On June 15th, a bullish hammer candle forms at $2,500, a small body with a long lower wick, showing buyers defended that level. 5. Volume. A volume spike accompanies the hammer, confirming buyer strength. 6. Setup rules. Entry. Buy at $2,550, above the hammer's high, to confirm the bounce. Stop loss. Set at $2,550, 4% below support, to limit risk. Take profit. Target $2,800, a resistance level, for a 2.1 reward-to-risk ratio. 7. Outcome. AMZN rallies to $2,800 in July, hitting your target. You exit with a 10% gain, sticking to the rules without overthinking. Staying cool. This setup's beauty is its simplicity. The hammer, support, and volume gave me confidence to pull the trigger. The stop loss kept my risk tight. Even if AMZN had dropped to $2,450, I'd have lost just 4%, no sweat. By focusing on the setup, I stayed calm, even when news about supply chain issues was rattling the market. Other chart types, beyond candlesticks. Candlesticks are my go-to, but other chart types can help. Line charts. Show only closing prices. Great for spotting trends, but miss the highs and lows. Bar charts. Like candlesticks, but less visual. They show open, high, low, close as bars. Heiken Ashi. Smooth candlesticks that highlight trends. I use these when the market's choppy to avoid fake signals. For most setups in this book, we'll stick with candlesticks. They're versatile and widely used. But try Heiken Ashi on a demo account with a stock like NVIDIA, NVDA, to see if it clicks for you. Technical indicators. Your trading toolkit indicators are math-based tools that analyze price and volume to spot opportunities. They're like the gauges on your car's dashboard, telling you when to speed up or brake. We'll dive into RSI and MACD later, but here's a quick intro. Leading indicators. Predict future moves, e.g. stochastic, RSI. Great for timing entries. Lagging indicators. Confirm trends, e.g. moving averages. Perfect for riding momentum. Volume indicators, like on-balance volume, OBV, show buying-selling pressure. My advice? Don't clutter your charts with too many indicators. Early on, I loaded up every tool I could find, and it paralyzed me. Pick one or two that fit your setup and master them. Logical reasoning. Why this works. Technical analysis isn't hocus pocus. It's grounded in probability and behavior. Prices move because of supply and demand. Candlesticks show how buyers and sellers clash. Trends reflect momentum, like a physics law. A stock in motion stays in motion until something stops it. Support and resistance are psychological barriers where traders act predictably. Volume confirms whether the crowd's backing the move. By combining these, you're not guessing, you're playing the odds. How to practice. Get hands-on with these steps. 1. Open a chart. Use TradingView or your broker's platform. Pick a U.S. stock like Tesla or Microsoft. 2. Spot trends. Plot 50-day and 200-day SMAs. Is the stock in an uptrend, downtrend, or sideways? 3. Find levels. Draw horizontal lines at support resistance, where the price bounces or stalls. 4. Check candles. Look for a hammer or doji near support. See if volume spikes. 5. Backtest. Scroll back 6 months and test the AMZN setup we discussed. Would it have worked? This practice builds your chart eye. I spent hours scrolling charts when I started, and it made patterns pop out naturally. It'll do the same for you. What's next? You've got the basics: candlesticks, trends, support, resistance, and volume. These are the building blocks for every setup in this book. In Chapter 2, we'll dive into trend-based setups like breakouts and pullbacks to help you ride big moves in U.S. stocks like NVIDIA or Google with confidence. For now, keep practicing, stay patient, and stick to the rules, not your emotions. Trading's a marathon, and I'm here to guide you every step of the way. Disclaimer: trading involves risk of loss. Past performance doesn't guarantee future results. Always do your own research and consider consulting a financial advisor.
This was just the beginning. In the next chapters of Mastering Trading Setup in Share Market, I go deeper into real trading setups, entry timing, and risk control, the things most traders struggle with. If you're serious about improving your trading, you'll find the complete book link in the description. Also, don't miss Part 2, where I cover the next chapters in detail. Thank you for choosing this audiobook. Have a great day.